we can't run away from talking about the infamous US reciprocal tariffs.
This particular policy shift, of course, comes from the business concern.
I would name 2025 the year of compliance.
Especially e-invoicing was very disruptive for them.
Everyone is talking about Ringgit might go below 4.
Hello and welcome. I'm Ahmad Hamdan.
And I am Amalina, Kamal. You're watching a very special episode of Beyond the Headlines. This is our business year in review episode, not just to recap 2025, right, Ahmad, but to actually interrogate it.
That is very right. So today we are actually asking, what did 2025 really mean for Malaysia's economy and who actually felt the impact the most? Now, to help us unpack that, we are joined by two guests who sit on different but connected parts of the economic ecosystem. We have, of course, Dr. Afzanizam Abdul Rashid, the Chief Economist of Bank Muamalat Malaysia. Now, Dr. Afzanizam is no stranger to NST and also Media Prima.
Yep.
He's been on our shows under Media Prima a lot of times. So, and thank you, Dr. Afzanizam, for joining us today. He is going to give us the macro view that will cover economic policies, growth, currency, and also global spillovers.
And next to Dr. Afzanizam, we've got Desmond, Anil, who is SME Association's Financial, Legal, Investment and Tax Bureau Chairman. Now, welcome, Desmond, to Beyond the Headlines.
Yeah, thank you for having me.
Great to have you here. It's your first time on Beyond the Headlines, right?
Yes, very first time.
But I hope that particular first time you won't get the jitters or whatever, because we're very friendly with our guests. And for this particular episode, it's great to have you both here. Thank you so much. We're going to dive in not just macroeconomics, but some micro level.
Yeah, the business environment as a whole. Basically the highlights and the major events that happen in relation to our economy in Malaysia and also globally, really. So let me start with you, Dr. Afzanizam. Well, we know a lot happened this year, geopolitically, financially, and also domestically. How would you characterize Malaysia's economic landscape in 2025 in perhaps one broad assessment?
I would say this year, in terms of the economy, it is quite decent, I would say. Of course, if I compare myself during the announcements of the Liberation Day in April, if any of you still remember that.
Very clearly.
Of course, the degree of uncertainties was great back then. You can see the equities market effectively plunging.
Yeah, it dropped to multi-year lows,
exactly.
1,400 range.
BMK was at one point was below 1,400 points.
Exactly.
Briefly.
Exactly.
So yeah, it gives a sense of it was scary like back then, you know. But after we understand and evolve, and you can see Trump administrations become more open to discuss and negotiate, and of course, fortunately, our government decided to opt for to negotiate with the US government. And now we have a better clarity. So in a nutshell, for a start, it was quite scary, but eventually it got better.
And Desmond, does the SME, I suppose, landscape here echo what Afzanizam said? What are some of the challenges that they faced, and what do they foresee coming into 2026?
Looking at the SME sector, I think looking at the whole year, I think pre-pandemic, they still are very defensive. They are slightly getting into the whole economic situation groove, or what's the word again? Maybe you can say getting back into track, to where they were before the pandemic. But after pandemic, I think everything that they do, they question themselves. If there's any difference in policies, they question whether I should be taking up and doing it. Or rather, if ever they want to invest, or even put money into their operations, I think it's very much a defensive measure. They'll ask questions to themselves whether this is a need for us or not. They don't simply take out money. So the agenda for digitalization as well is there. They embrace digitalization and so on. But again, all the policies has been put up front, and what has been supposed to be implemented by them, they're taking a slow also following their peers, and very much, very much defensive mode.
It's like wait and see kind of approach.
Yes.
You agree? Yeah.
It seems to be from the days from the time of pandemic, it's always a wait and see. They are doing all right. They're getting to a certain stage where they are getting better and better and better in terms of financials, in terms of operational, but there are other challenges. Things like talent development and so on. Even during the pandemic days, I think talent has been now, people have found different ways of doing business, or rather even graduates coming out, they have multiple source of income. So even then, that's a challenge when it comes to SME hiring them and so on. Yeah.
Well, analysts have also said that because of local spending and investment running high, it actually stabilizes our economic sort of landscape last year. Do you agree with this? What areas do you think should be made emphasized further to at least push our SMEs to not be reserved, as what Desmond just mentioned?
Right. Well, I agree that the growth momentum is somewhat slowed, but actually the moderation pace is still decent. If you look at the third quarter GDP, it came in at 5.2%. As opposed to 4.4% in the first half. So that sort of average out the numbers for the whole year to about 4.7%. So it's nearing to the government's top end of the range forecast of between 4% to 4%. So on that note, compared to last year's growth, it was at 5.1%.
You're talking about 2024?
2022, yeah.
Okay.
So there's a moderation in terms of the growth dynamics. But it is understandable because of the tariff shocks. It gets everyone caught off guard in terms of how they should respond. I like what Desmond said about the SMEs now become more granular when it comes to assessing their options. So I think their gut is very high in terms of the businesses, including SMEs. But economically, the government is trying their level best to sort of mitigate the impact. And if you see Bank Negara in July, only they started to cut the interest rates, the OPR. So prior to that, they really assessed the necessities of such policy response. Of course, prior to that, there's a lot of call for Bank Negara to intervene via the easing of monetary policies. But no, they taking a very guarded approach and really assess what really is at stake. So combination of good policies and clarity in terms of policy executions that perhaps provide some a conducive environment for business to thrive, I think.
Right. Desmond, speaking of growth drivers that we saw in 2025, did you think those drivers translate into business opportunities for SMEs, or were they particularly concentrated in specific sectors and also perhaps large players as opposed to small businesses?
Yeah, I suppose we have to understand what is these growth drivers is, because one needs to understand if you do in different sectors of business, especially when it comes to SMEs, right? Different growth drivers is based on sectorial, right? So, of course, certain sectors did very well. The upcoming sector that is going to probably do very well should be tourism, because next year is going to be Tourism Malaysia, right? We are looking at Visit Malaysia year.
Yeah.
So I think they're all gearing up for that.
And there's going to be a lot of spillover effects from Visit Malaysia.
Yeah. So at least there's some form of spending within Malaysia and getting our economy back up and track. But if you look at the logistic industry, for example, or manufacturing industry, for example, now those growth drivers there was affected by so many global factors.
Yeah.
And as I told you, SMEs, the smaller SMEs tend to actually work with what their peers do, Further to that, they also take evasive actions, defensive actions as well, and they don't want to spend so much of money because cash flow is affected.
Yeah.
And further to that, like how specific policies been put to place, right? So that's affecting, of course the growth is nice, but policies are also there, and you have costs that's bringing the profits down as well.
These are little hurdles that a lot of people don't necessarily look into that much, right?
Yeah.
Especially when trying to, I suppose, streamline or standardize certain processes, but they often is at the expense of SMEs or the underdogs, I suppose.
You know,
Small players.
it's serving 90% of our economy.
Exactly.
So if it's serving 90% of the economy and it's all very different sectors that it's serving, then the split of micro SMEs, small SMEs, and medium SMEs, I think if you have followed the recent announcement of the categorization of these three different SMEs, on the 22nd of December, a new categorization came out. You can have a look at it in the LSDN website as well. The new public ruling is out for the different types of SMEs there. So anything below 300,000 doing in revenue and below 5 employees, they are categorized as micro SMEs. You know? So anything above 300,000 to 15 million and up to 5 to 75 employees, these are all medium SMEs, and above to that, they are all medium. Small, then after that, medium. All right?
Okay. Dr. Afzanizam, I just want to go into inflation and cost pressures here, because just to spill over a little bit, right? Obviously, inflation didn't spiral, but we do know that cost pressures are very real. Did Malaysia manage inflation very well in 2025 alone, or do you think that households or businesses actually help to absorb that burden? That's why we don't see this being reported.
I think we need to understand that inflation and cost of living, they might seem similar, but they are quite different actually. Inflation is the rate of change of prices. Yeah, so you can see this year, our inflation rate is about 1.4% for the first 10 months. Last year, the full year for inflation was 1.8%. Prior to that, in 2023, was 2.5%. So you can see
It's been going down.
But that doesn't mean prices are going down. No, prices are going up, but at a reduced speed. So level-wise, the cost of living, the actual price that we pay, still at elevated levels, right? So that's why if you look at I did some simple estimates. If you look at our median household income in 2024, it was around 7,017 ringgit. It was increased from the 2022 level, more than 6,000. So it's going up. But if you adjust it to consumer price index, the real median household income hovering around 5,284 ringgit. So the gap between 7,000 and 5,000, that represent the loss of purchasing power because of prices. So on that note, I think on one hand, the central bank has done well in managing inflation. Yeah, imagine that if the Bank Negara decided not to raise interest rates in 2022 and 2023. Back then, in 2022, the inflation shot up to 3.4% because of the reopening of the economy. So they responded by raising the OPR from 175 to 3% in 2 years' time, in 2022 and 2023. So as a result, the inflation starts to come down. If, let's say, there's no such policy response by Bank Negara back then, you can imagine from 3% it might go to 4%, 5%. Then imagine how it will impact in terms of the cost of living, the actual price. So it got worse. It may get worse. So I think you need to differentiate inflation and cost of living. So those two concepts requires different policy responses actually. Inflation, yes, monetary policy would do the trick. But cost of living, it requires multi-layers of policy response. Typically, it's through income transfers. You have that STR, SARA and whatnot, and subsidies to some degree, price control. But beyond that kind of intervention is to ensure that the market is efficient. The market is market determined. So you have a very flexible price. I mean, that's the aspiration. But what we are seeing today is actually the price is going in one direction. It's only going up. So that requires a lot of intervention. I mean, looking at the market structure, whether there's monopoly, oligopoly, and how we transition it into more competitive markets. That requires a lot of, maneuvering basically to look at the structure, and the role of GLCs also play a role as well in how they set the context into the market structure. If there is monopoly, definitely it will impact the prices. So talking about prices is a very delicate issue actually.
Sounds pretty complex.
Yeah.
But from an SME perspective, which hurts the most? Do you think? I mean, I know you mentioned a little bit about logistics, right? But is it wages? Is it in the form of utilities?
So I think you hit the nail on the head there. Generally, if you look at wages, right, it has an inflationary aspect on the expenses of the P&L of any SME. So right, further to that, you also have logistic costs. And then you have all the utilities, which again, there was issues pertaining where subsidies has been removed and so on, right? And it comes to logistics as well, the elevation in costs is there when it comes to subsidies on petrol, diesels and so on, right? So SMEs definitely suffered on all of this area. And plus, when they have financing costs as well, it kind of hovered on a high side for them as well. So all of this plus the policies on SST, when you have implementation of SST where the SST was elevated from 6% to 8% for service-oriented firms, Plus you have E-invoicing, which again required internal digitalization, change management. People with do not know how to use systems, needed to know how to use systems now, because e-invoicing is not simply just changing and digitalizing your invoices, but you need to also change the operational know-how. Look at your warehouse management, your purchasing, and so on.
But
it is a reciprocal effect.
From a tax perspective, don't you think that's a good exercise though, for you to be doing those auditing and not just leave it to the end of the year?
Very good. Okay, it actually gives a kind of a pull factor for all the SMEs to start digitalizing certain things or putting the documentation right, so to speak. But again, you are having all of these policies plus all the you were saying on prices all come together. It's not staggered approach. It's not something that you have planned, okay, I will do this. And you can also have a look at the e-invoicing, where the exemption was first on 500,000 and recently they announced 1 million. Of course, eventually everyone will have to be in the bandwagon, right? But again, this requires certain planning for SMEs. So for them, it was all immediate cost. So when immediate cost comes into your company, how do you actually get back this cost? Is through actually elevating the prices of your products and services. So, I mean, of course, cash flow is a big issue when it comes to this. Elevation of your cost is one thing, but when you get paid, so SMEs have this problem whereby where they have cash that's coming into the firms a bit later. And that's where financing is required for their working capital and so on.
Right.
And this is where they got no choice but to transfer the cost, right, to the consumer.
So realistically, it can't be passed on immediately as it's been introduced.
If you look at it right now, it's already been slowly creeping into the consumer prices already.
Yeah.
I don't think your $50 now you can buy anything like those days you can buy, right?
Thanks, Desmond, for sharing SME Association's insights in terms of the pressures that you guys had to face the past year. We also have Datuk William Ng's insight, so we're gonna segue into that and come back to the discussion. So let's have a look.
2025 was a year of policy announcements and, from e-invoicing adjustments to now financing schemes, as well as ASEAN ambitions, because we know that took place for the most of the year. But if you can be brutally honest, where did SMEs actually genuinely progress?
I think where SME is concerned, there are a few things that happened this year. As you have mentioned, one of the greatest issue that we had was that there were many policies that were being rolled out in a very short period of time, and this created a lot of pressure for most of our SMEs in terms of compliance. So in fact, I would name 2025 the year of compliance where we now see the emerging of the compliance economy across not just Malaysia, but across globally. And of course, in Malaysia itself, we're seeing all these things translated into new rules, new regulations, new policy by the various government agencies and ministries. There are a few things that, of course, we were quite happy with. One, I think you're aware that the e-invoice were initially introduced in a very short time frame. And I think through our advocacy, both with the Ministry of Finance, with the various ministers, as well as with IRB itself, we managed to do two things. One, of course, in the early of the year, we managed to get a waiver for the micro enterprises. These are the small traders, the nasi lemak sellers, and so on. So the initial cap was 500,000. I think we saw just 2 weeks ago that this cap has again been lifted up to 1 million, so that a majority of small enterprises will be exempt from e-invoicing. There's also been a more staggered implementation period, so SMEs have a longer period to actually adjust.
It's interesting that you mentioned that, because industry associations such as Samantha are often the bridge between the government and the SMEs in question here, right? And in your task to also do the nitty-gritty of the work, which is like pushing back certain impractical policies while also advocating for targeted support. But not every issue, a lot of people understand, equals to traction or urgency. Now, looking back at 2025, which issue did Samantha push the hardest, apart from the e-invoicing take-up, that you yourself would like to highlight and probably move forward in 2026 to also give more attention to it?
Our challenge has always been not so much whether we should comply with new rules that are norm globally. We cannot object to rules that has become a standard globally, because that would mean that Malaysia will be left out in international trade, in governance, and so on and so forth. So we are all for better rules in terms of labor, better rules in terms of tax, better rules in terms of working conditions, and so on. But what we have objected all year long and over the past many years is that these policies should not be stacked at the same time. Because when you stack it, there's a huge, problem to the SMEs who may not be able to comply all these rules at the same time. So I think one of the things that we were quite happy with is that there were quite a number of rules that were meant to be introduced in 2025. Some of this has now been pushed back to perhaps 2026 and 2027, among which, of course, is the things like the EPR, Extended Producers Responsibility for collection of solid waste, plus and so on. There are many issues that are supposed to have been announced or introduced in 2025 that we managed to push back. What do we hear more of that? Another thing that we are quite happy with is that we always have these challenges in trying to hire people for SMEs. And through our partnership with Talent Corp, we managed to secure a 2 million fund for our members to hire interns with a subsidy from the government. So our hope is that once this intern come and experience working with an SME and the broader job scope that SME present, they might stay, and that will help to alleviate some of the talent pressure that we may have.
As we know, we also saw talks about tariff a lot and custom procedures, basically, for the past year. But then the non-tariff barriers also continued to still affect SMEs trying to import inputs or export competitively. Basically, the market itself is having to be driven by uncertainties, in simple sort of like explanation. From Samantha's perspective, at what point does necessary regulation becomes a drag on productivity? And what can be addressed as when it comes to having to, because you personally mentioned it is a compliance economy, right? And we have to look at tariff-related policies that are not just in favor of one particular stakeholder. It has to benefit the entire ecosystem.
For the longest of time, we realized that the issue is not so much the tariffs. That, of course, play a very important role. But what is even more debilitating to trade generally are the non-tariff barriers. These are little things that countries and all their firms and businesses on the ground are implementing to sort of block people from outside from selling to their respective countries. And these are not necessarily in the form of tax or duties or import tariff and whatever not. But at the same time, we also realize a lot of these issues are not just limited to tariff and non-tariff barriers. It's really the familiarity of the business people on the ground. We take an example, a neighboring country like Indonesia. We literally have got zero tariff in most of the products, if not all the products, and yet the NTB has consistently been high, or at least that's a perception. But even more important is that there's very little connectivity or understanding on the ground, and I think that is quite important. We have got some choice words with regards to our Indonesian counterparts, and so do they, and we need to remove all that, which is why earlier this year in 2025, Samantha, along with our counterparts in all the other 9 ASEAN member states, form what we call the ASEAN SME Caucus, with the sole purpose to try and break down this barrier on the ground. So we go beyond NTB to saying, look, what can we do collectively to try and work together to increase trade among ourselves. On a second point on compliance and productivity, you're absolutely right. There are a lot more things that Samantha and as well as the government in general can do to support the SMEs. This year, we focus a lot of our effort on the survival issues, you know, the cost that is increasing all over the place, the competition, especially from China, who are coming in quite strongly in displacing some of SMEs, the issue of cash flow and compliance, that we did not push enough on how do we inculcate a productivity mindset among SMEs. To me, that is a structural issue. We need more incentives in terms of automation. We need help to ensure that SMEs' capacity and capability are heightened. We need help for SMEs to not be stuck in this low wages conundrum that we are in. And a lot of these require assistance from the government in terms of support for automation, for digitalization, and for changing of mindsets.
So beyond advocacy and beyond statements, right? What sort of practical steps do Samantha look towards in terms of ensuring Malaysian SMEs are actually genuinely prepared to compete?
As you are aware, we now have a new minister at the helm of the Ministry of Entrepreneurship and Cooperatives. So there's YB Stevenson, who was formerly, of course, the Minister of Human Resources. And so far from the announcement he has made, with regards to his direction for the SMEs general, he came out with what he called the ABCD policy. And we are totally in sync with that policy. We think that is what will work for SMEs. Top of mind really is what can we do to collectively remove barriers to doing business for SMEs, i.e. no new compliance requirement unless they're absolutely necessary. And what can we do to ensure that the cost of doing business continue to be managed within businesses and SMEs. So again, no new taxes, no new incremental costs being put together. And I think these two, ease of doing business and cost of doing business, will go very far in supporting our SMEs. Where Samantha is concerned, 2026 will also be a year of ESG and AI adoption for us. Recently, we have actually been recognized by the Malaysia Productivity Corporation for delivering 12 voluntary ESG disclosure using AI. So again, ESG adoption among SMEs is very difficult. But with AI, we managed to shorten what would normally take 3 to 4 months of preparation into essentially just a 2 weeks process for most SMEs. So we continue to roll that out on ESG, on digitalization, and in supporting the government in trying to reduce the cost of doing business and remove the barriers of doing business.
Just quick one. Is Malaysia doing enough to differentiate between ESG expectations between large companies and SMEs? Or are we actually effectively asking small businesses to just meet the standards of large companies here?
It's something that we're trying to push. Right now, there is very little distinction between larger companies and smaller companies, because obviously our scope 1 and scope 2 emission will be the scope 3 emission of larger corporations. I think Malaysia, especially the Securities Commission, has come up with what we call the SEDG, the Simplified ESG Disclosure Guide. But to us, even that is not simple enough. We have, for example, a member, a batik manufacturer who actually sells to a very large GLC, and has been told, look, you know, unless you have an ESG disclosure in place, we are no longer able to take your products from 2026 onwards. Now, that business is worth about 40,000 ringgit. To do that compliance would cost more than for the 40,000 ringgit. So it makes very little sense. So you're absolutely right. There must be more distinction between the kind of compliance requirement we require from smaller players as well as larger players. But overall, ESG disclosure is not a train that we can stop, but Samantha, along with our partners, will do what we can to try and support our SMEs more and to create the distinction that you have mentioned correctly.
Now, speaking of challenges in 2025, we can't run away from talking about the infamous U.S. reciprocal tariffs under President Donald Trump, right? This is a question to the both of you. Maybe Desmond can speak from the perspective of the impact on the businesses, but to Dr. Nizam, how exposed is Malaysia really to these tariff shocks? Because we hear it a lot in the news, but we don't really know the average people on the street. They don't really know the impact of these tariffs.
Yeah, how does it trickle down?
Right. I think we have to understand that the one who pays the tariff is actually the US businesses whenever they import products from abroad. So the channel is that the business in the US will be hit, and chances are they might want to pass on those additional costs to the consumers.
In the US?
In the US.
Okay. And how does that impact here in Malaysia?
If such dynamics, for some reason, it can affect the growth momentum in the US, that's where the problem comes in.
Okay.
Because US economy practically is the largest economy in the world.
Okay.
That's one. So, fact number two is that we tend to correlate quite closely with US growth.
Okay.
Yeah. In the case of Malaysia, our GDP growth correlation between us and the US is around 80%.
Oh, wow.
So the old adage, when the US sneezes, everyone catch a cold, still, for some reason, still applies.
Oh, okay. So when the economic growth in the US slows down, chances are we're going to feel it.
So that's the reason why we are as an economist, we pay close attention to economic indicators in the US. We have noticed the business sentiment in the US, such as ISM index for manufacturing sector, has been hovering below 50 points. It means that the US businesses are very pessimistic these days. And you can see from their survey responses, they always keep complaining about the impact of tariff. And then there's another group, obviously, is the consumers. And consumers account about 70% of the US economy. Also, we are seeing a very weak consumer confidence these days. So those two represents their aggregate demand is likely to be weaker in 2026. And that's the reason why the markets has been talking about the Fed should cut their interest rates more in 2026 because they need support. So I think that's the main worry, the first layer, I would say. But beyond that, of course, the intricacy, because the tariff, because we are living in a world where everything is very complex, right, in terms of the supply chains. So there will be a ripple effects, I would say.
It's a very globalized world.
Right.
Mr. Desmond, perhaps the impact on SMEs.
Yeah, so in my opinion is that SMEs, if you are looking at import and export, I think this has given a chance for SMEs to look up at different sectors now, different markets, for example.
Opportunities.
Different sectors and different markets.
Okay.
Right. So every time US was mentioning, right? Nizam was mentioning that America is the largest importer, right? Largest market. But for Malaysian SMEs, US is the gold mine. But right now, they have now thinking differently. They like to go into different areas which you never heard of, like places like Maldives, Timor-Leste came up now recently. The new ASEAN edition, right? So our family and ASEAN, I think I have to congratulate our Prime Minister and also Tunku Zafrul from MITI. I think these guys, they went up and did very well. Conducted a very good ASEAN as well, inviting the American president here, Donald Trump, and then from there they actually carried on negotiations and so on pertaining to tariffs. So eventually SMEs actually were glad with that, I think, with that perspective. But what I could see is that now they have taken this chance to look at different other perspectives and different markets, plus to explore what type of products can go into the US now.
Well, in other news, the ringgit actually benefited from a weaker US dollar,
yeah.
right? So Desmond, do SMEs actually, are able to kind of like reap the benefits of this? Like, to what extent do
It depends on the sectors, right?
Yeah.
Yep. Predominantly, we are also an importer, right? We are exporter and also we are also import country. So SMEs are doing a lot of importations as well. But in service-oriented firms as well, some of us, we are also trading in US dollars, right? So I think in this situation, we have now not so benefited in this situation because
the importers will benefit from a weaker USD, right? But the exporters, on the other hand, would get less revenue because of the weaker USD.
Yeah, but you must understand when you have import, the purchase price is there, but the margins also will be thin, right? So in that sense, they sometimes have to bring down the margins because people know that they, US dollars has also, the ringgit is strengthened against the US dollars. So sometimes it's thinner margins for them, you see. So the negotiation power is also there, whether you can demand that kind of demand and supply for that particular product or services that you're offering. So people will negotiate price with you now, you see. So that comes into play unless you have pre contracts which actually curbs all of these things, so this is where SME have to go back into the negotiation boards. It gives a little bit hustle there. They have to fight for keeping the margins there and the prices there. You see? So it's a big challenge on that perspective, but they are still enjoying the reap of all of these benefits there.
Dr. Nizam, so the ringgit strengthened against the USD.
Right.
Quite significantly, despite the fact there was a massive outflows of foreign money from our local equities market.
Right.
Do you think that the ringgit could have performed better, if foreign participation had been stronger in the equities market?
Yeah, you are right in quoting the numbers. I mean, in terms of foreign funds in the equities market, generally they are net sellers this year. But the thing is, those money, they are still in our Malaysian soil. If you look at the fixed income markets, you can see the ownership in the MGS, Malaysian Government Securities, still high.
Government bonds.
Yes, even in treasury bills. And you can see our Bank Negara's FX reserve keep on climbing. So that gives you the indication that the money is still in Malaysia.
Just not in the stock market.
Not in the stock market for some reasons, yeah. I think when it comes to predicting the ringgit going forward, everyone is talking about ringgit might go below 4. Yeah, I think that's quite possible. If you look at the simple,
we're at what now? 4.0.
Yeah, right. 407. Yeah.
Wow.
Yeah. The best performing currencies in Asia. Right. If you look at our dollar ringgit average, the moment we remove our ringgit pack, it was in July 2005 until today. The average is around 381, 382. So if you believe in a mean reversion, meaning the prices or the exchange rate will go back to its mean, to its average, then we are looking a potential ringgit to go below 4.
Wow.
But the question is it's always about speed, and because Bank Negara from time to time perhaps they might want to intervene because they want to see an orderly fashion in terms of the exchange rate movements. If it's too disruptive, they might want to intervene, I think.
If it's too disruptive, can you just lay out what the people effects would be like?
Sure, like what Desmond said, of course the exporters will be hit hard because of the steep appreciation of ringgit, because their earnings in foreign currencies, and when they repatriate and turn it into ringgit, they might get small amount. So what matters now is how the exchange rate would fluctuate to a degree that not disruptive to the economy. Because it's always two sides of the coin if you talk about currencies market.
No, I do agree. I mean, then we will create another problem for our markets then, right? Okay. We go into, earlier on you did mention Bank Negara only introduced the 25 point basis point cut to the OPR in July. But what do you think the central bank was responding to, and what message was it actually sending?
The thought process behind it.
Right. I think it's more like they want to preempt any possibility of slowdown in the economy. And then the lower inflation rate effectively gives them the room, the space for them to actually reduce the rates. So it's also a form of signals to the market. Hey guys, we are ready to respond, and here we are. But going forward, of course, they would continue to assess whether such maneuver or such policy response would actually resonate. I suppose they would have their own cost and benefits analysis. Generally speaking, globally, the trend for interest rate is going down. And then recently we have seen the Bank of England has reduced their interest rates. Our neighbours in Indonesia, Philippines, Thailand, they've cut the interest rates. But in our case, we only cut once. So I think Bank Negara is being careful about not to overly stimulate the economy via monetary policies. I think they want to conserve perhaps their policy space in the event of any eventualities. But for now, I think since we are cruising quite well in terms of growth, and assuming next year, the forecast for next year is around 4% to 4.5% of GDP growth. If the economy continue to lingers around that level, I think there's no compelling reason for Bank Negara to actually reduce the interest further.
And Desmond, did the lower OPR ease financing pressures for SMEs? Did we see an uptick in loan uptakes by small businesses?
Okay, I think the medium ones did very well. They were able to access the funding, but the smaller ones, the micro ones, then they were having difficulty getting funding.
Still,
because they are still recovering from the pandemic. Number one, number two is that I think they were more looking at the compliance costs, which is involving SST, especially e-invoicing was very disruptive for them. They were uncertain. So in general, I think for them to get access to this kind of fundings were a bit of a challenge because they had to sort out internally their own documentations. I think their finances were not proper as well. But otherwise, I think the medium ones did very, very well. They managed to get some fundings from the government and also from the banks as well. Yeah.
When Desmond mentioned about SST, I was like, but they just mentioned GST might be, reinstated. Yeah, but maybe that's for another episode. But very quickly, do you have what are your comments actually really?
Well, if you ask me, right now, I think GST would be the way to go. We were always as an association, chair of the bureau. We met the Ministry of Finance. We mentioned them. GST is the way to go forward because if you can see, simply put, if you look at the SST right now, one of the reasons why there is a cascading effect, right? One of the reasons why the prices has gone up is because of this tax. When you put tax in the manufacturer level, then it goes into the cost and someone has to recover this tax. So it's been transferred in the supply chain. Same thing if you go and put and alleviate the 6% to 8% for service providers, because service providers still are subcontractors to some party in the supply chain. So it is going back into the system and eventually it hit to the consumers. So when you have a GST, there's a credit refund there, which can offset and contra off and so on. So you can kind of level the taxes when it comes to the consumers. And consumer is transparent enough to see. Okay, when you get a receipt, you can see the taxes that you have been paying. But SST, you don't know how much of that effect of cascading. It can be even, it can be 10%, it can be 8%, then it can be even inflated by almost 30%, To be honest with you, it will be a difficult task because you are now changing the whole perspective.
Right.
I believe SMEs also will start making noise because they
already on board them.
I mean, you just introduced the expanded SST and all that, and now you're saying that.
And then you have, don't forget, this is actually part and parcel of how you implement your e-invoicing as well. Because the normal perspective is that you have to implement your GST first, and then implement your e-invoicing. All right, but now it's the other way around because you have already implemented your e-invoicing, and now you have to implement your GST.
Yeah, if you look at how GST can actually collect the revenue, definitely GST will easily outpace SST collection. But the issue here is like what Desmond said about the implementation, how you manage your stakeholders, and you have to acknowledge that GST has been repealed. So on that note, it has to be tabled as a bill again. So there goes you in terms of engagement sessions and whatnot. You need to basically to start again all over again. That aside, administrative issues aside, but in terms of the ability of GST to collect more revenue, it's quite clear cut. I think from my estimations, if you look at GST at 6%, assuming it's still around we can actually collect around 70 billion last year, as opposed to SST collection was around 45 billion. So there's a big gap in terms of how GST can actually potentially can collect from such a tax regime. So if we can do that, I suppose the government also need to revise again other tax measures like low value goods now, the services tax, digital services tax, because the GST can actually can effectively collect more taxes from there. So meaning to say that if the government wants to pursue this, then therefore they need to also reload again the existing taxes that has been introduced. So at the end of the day, we don't want to overburden the businesses, but at the same time to create a better effectiveness in terms of collecting more revenues from the economy.
So the cabinet raised the e-invoicing threshold from 500,000 ringgit to 1 million, which is expected to exempt about 200,000 or more SMEs. So this particular policy shift, of course, comes from the business concern. But to what extent does this sort of like news is like a win for SMEs?
I think those have not was trying to wait and see, playing the wait and see kind of game. I think they benefit a lot because then you don't have to implement and incur these costs. But I think it's an eventual thing, because eventually, because the system actually advocates that you were required to get into the e-invoicing program or the alumni, for example, you can call it. Because it's the same thing as GST as well, because if it's a representative, your other party is actually having a requirement for e-invoice, you also have to be an e-invoice participant. So I would say that it is a benefit if those people have not implemented anything yet, and trying to see whether it's, do I have to put out that much of cash to digitalize certain, my processes and so on, which I've not done it yet. So then I can still wait. It's not difficult for you to implement, you don't have to spend a lot of money actually, but the thing is, the only thing that you have to have the first cost would be to just change the mindset of your people within the firm, because sometimes they will say, why should I do something new? And then you have to give them some training, and then of course the software providers have to come and give you that kind of training, and they charge you for all of those things. So yeah, that's the initial cost there, but eventually I think they see the benefit. And further to that, I think also, if you really focus on the system which has been implemented provided by the LHDN also, it gives a kind of a way to document your invoices. So in this way, all the other documents, your purchase orders and all of this will fall in line. And for you to get funding is easier when you have all of this documentation been done. So SMEs must understand that the long-term view is that for you to do all of these things correctly, so that you can actually, reap the benefits of going and getting yourself proper funding from the government or even the financial institutions there.
I like what Desmond said about the documentation. So the GST perhaps can be a catalyst how this scheduled economy can be addressed. Some estimates...
Gig workers?
No. The business which is not registered.
But the e-invoicing is able to track it,
yes,
right?
Yes. And the amount to the tune of 300 billion, that's a lot. So GST can address those issues and not just to unearth this shadow economy and perhaps to make it more formalized. And
3 billion is in the form of leakages, is it? Or like the basically the value of the
it's a shadow economy, mostly unregistered business. They do business perhaps legal and perhaps illegal as well.
They don't declare their taxes. They keep it under the radar.
So that's about 3 million
300 billion. More than 300 billion.
Yeah.
That's a lot.
Wow, that's a lot.
Yeah. Anyway, Dr. Afzanizam, Malaysia spent much of 2025 pitching itself as a manufacturing and data center hub. But how much of that actually translated into actual investment rather than just announcements?
Yeah.
Intention with best, but
Nowadays, if you notice, when MIDA announced the approved investment figures, they always
Proof investments. That's
proof investments, but also they also put in some numbers in terms of how much those approved investment which has been realized.
Realized investment.
Right. So the figure is around 80 to 85%.
Okay.
From 2022 up until this year. So I think the execution rate at those rates, I think that's quite decent. So that's why I think why we are seeing our economic growth these days is being propelled by private investment and public investments. If you look at the growth dynamics in Malaysia, the consumer spending, of course, that's the largest chunk, about 60% of the economy. The growth number has been quite tepid, about 5% growth thereabouts. Their long-term growth is around 6%. So that goes to show, although there's the labor market is in full employment, I mean, a lot of people have jobs and they receive incomes, but when they spend very cautiously. So the one is taking the slack now in terms of propelling the economic growth in a overall basis is actually the investment activities.
And Desmond, did SMEs actually benefit from these investment narratives?
Especially data center projects.
Yes. I think in some ways, all the technology firms, they benefited, and infrastructure firms, they benefited from there. There are firms for engineers as well who actually benefited from, opening up or even creating a data center. There's one in Cyberjaya, currently valued at about 700 million. It's pretty interesting one there. I think it's good that the SMEs were getting jobs from this, and I think they are gone in very early, right? Before the investments from NVIDIA comes in, Oracle comes in, and so on. So I think the pace on AI is also helping the SME sector on this part.
Dr. Nizam, beyond tariffs and geopolitics, what under-discussed risks worry you most as an economist in 2025, whether fiscally, structurally, or financially?
Well, the downside risks, I would say, still very much emanated from abroad. I think we are, to me, when I look at the general trend in interest rates, it sort of gives you a signals that the economy needs help. Needs assistance.
Slowing down, you say?
Yes, it needs assistance. Yeah, globally. So we are watching on this space where how you can evolve going forward. So since that our economy is very open to trade and investment from abroad. If you look at total trade to GDP ratio is around 130%. So you can expect whatever happens from abroad, it can be transmitted directly to our economy. So that I think that's the main risk. But beyond that,
what do you think is causing that? The slowing down of the global economy.
For one, is like I mentioned, the tariff impact to the US economy,
and then the trade war, probably.
The trade war, the geopolitical tension, how it can be reverberated to the global supply chains. As it is now, lots of vessel has been rerouted, and that takes a lot of cost in terms of business cost lah. So I think on that note, I think that's the main issues lah. But domestically, I'm quite sanguine.
Okay.
I think because we have, if you look at our fiscal policies, we have seen series of tax measures and subsidy rationalization. I think that's an important part. I think we need to give credit to the government, especially on RON 95. I must say that the implementation is quite seamless, perhaps, by using the MyCard. So
I agree.
Right. So that creates a lot of fiscal space for the government. If you look at the first 9 months of 2025, in terms of fiscal deficits, it has narrowed to 3.3% of GDP compared to 4.1% in the first 9 months of 2024. So the narrowing of fiscal deficits is something that credit rating agencies place a very high importance. You can see the recent comments made by Fitch Rating. So that's why I think if you look at why our ringgit has been appreciated quite substantially, it's because of the foreign funds in our fixed income market, the bond market. Because the bond market players, they always place a high degree of importance on credit, the government's credit. So when the government is very serious about fiscal consolidation, not just through measures like tax and subsidy rationalization, but also through legislation. We have Public Finance and Fiscal Responsibility Act 2023 and recently approved Government Procurement Acts. These are the legislation that would allow a better transparency that would help the government to manage their finances really well.
For SMEs, what will be defining them, at least going into 2026? A lot of their processes, a lot of their efforts going into the next year, right? Is it what, tax policy or more of a domestic demand that you guys are pushing out for?
I think domestic demand is not something that they can actually control.
Okay.
But I think they can control the spending of their own. So that's why if there is any policies outside there, if it's a mandatory policy, then they got no choice but to spend. You see?
What about external risks?
Things like from the government is the one that they are really afraid of, especially when it comes to taxes, recent refund cases. I think it's a landmark thing whereby the government is giving back refunds, right?
Delayed, right?
It was delayed, it had a 4-year refund methodology which was not very good, working from their favor, and now after 3 years, anything or your refunds after 3 years, which is actually still a bit difficult for them, because if they are having any refunds that's not been paid, 50,000.
It's cost for them, right?
Of course, it's cost,
It's also a make or break, right? You can just like shut your business almost overnight.
If it's a small micro business, of course, it is. I told you, it's not been paid. They don't get paid on a monthly basis. They look at other things. Yeah.
And minimum wage as well.
Oh yeah, that's going to be raised. Yeah.
Dr. Niz, I'm looking into 2026. What are your best case expectations for growth, inflation, perhaps also monetary policy?
Sure. Our house view, we are looking at GDP growth of 4.1%. So that's it's a slowdown compared to 2025, which is around 4.7%. And despite that, we foresee that the Bank Negara will stand pat in terms of their OPR.
Okay.
But that's not to say that they won't intervene. But of course, whatever they'll do, it will contingent upon what's happening abroad. But the space for them to react is there. So and the government also, you can see, because of the improvement in their fiscal positions, that also could allow them to, let's say, to prime the economy. So I'm not saying that the growth will be much higher, but I think at least it's stabilizing. It's a part and parcel of their duties to ensure that their business is commercially driven. And that will translate into better revenue growth, and effectively will allow them to give more dividends. And I noticed this narrative is quite similar at the states level, in Sarawak, in Selangor, when they tabled their budget recently. I think you can expect SOEs or GLCs will play an effective role in terms of creating the right ecosystem for the business. My issues on that is actually perhaps is how these GLCs and SOEs, in terms of their existence within the business community, there must be a clear exit strategy, because what we want is really a private sector driven economy.
On paper, Malaysia held up reasonably well, right? I think we, in a way, our growth stayed intact, and then inflation didn't run away. And with that, again, I'd like to thank our guests on set today. First up, of course, SME Associations, Desmond, Anil, thank you so much for being here. And Dr. Afzanizam,
most welcome.
Thank you so much for being on Beyond the Headline.
Thank you for having me.
Indeed, it has come to the end of the episode. Of course, if you like this particular episode, don't forget to like, comment, and subscribe. Don't forget to also turn on the notification bell if you haven't already. You'll not only get NSC Beyond the Headlines update, other NSC Online's news report, Business Times news report will also be delivered to you. Follow us on our social media. We're everywhere: Facebook, Instagram, X, Threads, as well as TikTok. Now, this is just one of our year-ender series. We have up next, of course, Crime and Defense. And if you've missed it, we've got our news, politics year-ender as well. And with that, my name is Amalina Kamal.
And I'm Muhammad Hamdan. And we'll see you again.
We'll see you next year.
Soon.
Happy New Year, everybody.